Good morning, everyone. All right. Question on my mind is how long can this market grind higher? And certainly holding up, came back yesterday. The financials and JP Morgan gapping down, came all the way back. Financials are up this morning. Is there anything wrong? Anything wrong with this market? Why we shouldn't think that the multiple time frame downtrend is going to resume itself to the downside? V bottoms being made, complete retracements of sharp declines are very rare, but reversals typically continue until questions like the one I'm asking begin to be asked. And at some point, many will succumb to the short-term move up against the longer-term move and believe that it's different this time. And historically, they'll get hurt. And so while a move like this, for myself anyway, honestly, could have been played more aggressively to take more advantage of it, I know on the historical side of what's going to happen, the pullback will be the bigger opportunity. So that's what I'm looking for. And as prices approach, areas like this, you as much as I have a bias that those longer term trends have to take control. And by that, I mean, this kind of a pattern. It's a big drop. Yeah, I like that, Pat. A party until the booze runs out. That's good. That at some point, whether it's at that red line with resistance or slightly above, resistance is an area that at some point, this trend, the power of this move down is going to take hold. And I'm betting myself, I'm betting on the historical pattern that this comes down to make a higher low. I don't know if it'll make a lower low. What is going to get things moving in that way? I don't know. Usually it's some news event, something that was brewing kind of under the surface. It's not like it wasn't talked about, but it was ignored. It just wasn't on the, the front page, so to speak. And, but that's how it happens. So if this keeps marching up, one of the questions in the room yesterday was, do you think it's possible that we wouldn't make new lows on the year? I said, anything's possible. We have opinions, but anything's possible. But I did say if this was able to continue to push higher, right, the further it was able to retrace into this major resistance area here, the greater the probability of not breaking the lows of the year. And then when it gets wherever it's going to be, whether it's here or here, the reaction to that resistance is going to tell us a lot. So, for example, right now, prices reached this area of resistance in the Russell 4 days ago, actually 5 days ago. And this gap down day, there was an attempt to go lower, and it didn't happen. And that's what we call a red bar ignored, or a bearish event being ignored. It wasn't so much ignored that day because the day closed red, but yesterday it negated it. And while it didn't take out resistance, it didn't follow through to the downside. So you have to respect that buyers are still in control here in the face of resistance, and that's bullish. Yes, Tony, call it a time correction. So we have, just so, to alleviate any confusion, we have different terminology. Almost, I guess, every language does, right? We have a language of the markets, especially from our point of view using our method. So a time correction at resistance, time corrections, let me back up. Time corrections can come in different ways. Time correction is nothing more than a move sideways. However, does a time correction come after a momentum move higher into a void or into new time all highs, new 52-week highs or all-time highs? Whereas it's creating that support where there is none. There's no resistance, but it's creating an area of support, and it's correcting its, let's use the word overbought or extended move. It's correcting that sideways. And one of the ways that we use moving averages as a visual aid is to say, well, when it corrects sideways and the 20 MA, which will be well below that because of the momentum move, catches up with the time correction, it should be ready to resume its trend. Whereas something like this, where it's had this momentum move and now it's going sideways at resistance, while I can call it a time correction, I may refer to that as this is absorbing the supply, which is another way of communicate bullish price action. So when prices get to a resistance area, there's supply, there's sellers there. We know that the sellers are going to take advantage. I mean, we know somebody bought here because it stalled and then it fell. And look, I think most of us or all of us have been in a position, I know I have, where I may have bought something like this. And now as it comes down and it goes all the way back up, I'm like, a blessing to get my money back. Well, when things like that happen, because we're so focused on getting our money back, we might lose sight of the fact that this move was so bullish. And maybe it can get through that. So we want that relief of, hey, this was a big loss that I wasn't anticipating. So I can sell half rather than exit the position if I can, recognize, or my brain will allow me to recognize the bullishness of this move, even though it's at resistance. And now I can see the bullishness of what it's doing now. So this is where, you get experience and you say, you know what? Last time I gave it all up, it went higher. I still don't like that the situation is right now. Let me sell half and put a stop under the red bars low. That's an option as well. So we're just saying a time correction more bullish than a price correction. Let MA catch up. Well, it's one and the same thing, George, unless so just like this move up, it's above the 20 MA now. That's the blue line. Well, what if it went sideways until the 20 caught up? But you see, it's a bit different because this is a downtrend, right? So it's normal for the 20 to be below prices and the 50 to be above prices when prices are in a downtrend. But now the 20 is flattened out. So in a way, this is how, if you learn to use the moving averages as a visual aid as we do, we can trade without the moving averages if we choose to. But our eyes learn what these pictures mean in that, well, the 20 MA is no longer moving down like a railroad track effect with the 50. At this time, prices have gotten decently above it, and the 20 is flattened out. Now the 50 is flattened out too. Is that resistance? What should we do here? I mean, here we are. We're faced with a real situation here. What should we do? We have to get this buy. Well, yeah, but day trading this probably we could, of course, because of small things. But if we just stick with this time frame, what we should do is nothing. Right? Stand aside. We can day trade pretty much anything, right? But the message here from this time frame is to stand aside. Could it break out and keep going, do something crazy like that? It could, but the message here is either to stand aside or wait for some event that takes control of the major trends, which are down, and maybe a gap down or a nasty reversal, whatever will produce that, and then press the short accelerator. So it's not an easy, pick right here, so to speak, as to what to do. It's more of, all right, I can day trade this. I'm not really interested in the long side because this has a tendency to result in a breakout bar failure or a topping tail. Nonetheless, schizo markets do whatever. You know, if you're aggressive, you press the button, you're willing to get in out fast, whatever you can do whatever you want to do as long as you got rules, right? We make the rules and we do what we want. Going spiders showed a little bit more strength, able to push through that level. And Alex is saying, can it get to 270? Boy, do I wish I could say absolutely yes or no. All right, but there's the area, but you got a few reference points along the way, and that's all they are. The 50 MA comes into play. It's widely followed by institutions, especially on the spiders or the S&P 500. So you'd want to know where both are. You've got an unfilled gap right here. That is on the radar of many technical traders as a reference point. So you've got this area up in here to pay attention to. But okay, let's assume that's going there, right? Because we don't really have reason not to assume it because every bar here is green. We have broken a prior day's low, and this one gapped down and it recovered yesterday. Miracles do happen, right? So unless it gets under yesterday's low, and if today was some nasty day that broke below yesterday's low, sell short, right? Go for it. But at this point, until it breaks a prior day's low or retraces even, let's suggest 80% into today's bar, the expectation, yeah, it'll go higher. It hit the 50 and we'll see what happens from there. It may hit that gap fill. We'll see what happens from there. And maybe it can get to 270-ish, right? No. We just have a way of monitoring and saying, you know what, right now, longs, bulls are in charge. And while they turned here, they held their ground. They stepped up where they had to. And it's moving up. And it's up here, right? It's up a bit higher this morning. It's at 260, just above 260. Not up a lot, but it's up. So we'll see. Trading is about looking at the technicals and coming to a conclusion, which you believe the odds in your favor, you place your bet, or you stand aside. You think the odds aren't good enough to place the bet, right? You can stand aside. So right now, it's like I look at this as being, well, bulls are in charge. Matter of fact, where's resistance? In here and here. Am I comfortable swing trading it overnight? No, personally, I'm not. Doesn't mean it won't go up. Can I day trade it? Absolutely. About how many bars above the sideways, only the most recent one matters. What only matters is what's to the left, Tony. Now, a normal thought that comes to mind, well, if that's a bigger area, it's more potent than a smaller area. To some extent, I guess that makes true from a common sense point of view of thinking that there's more resistance there. However, I've seen small areas act like a titanium wall and prices bounce off it. And I've seen big areas where prices go through it. So I tend to just look at something as like, that's the spot where the reversal is likely to happen and then see what does. What's more potent is the actual reversal versus what's to the left there, right? So whether it's this unfilled gap or that 50 MA or right at the top over here, when you see the event of some ugly reversal bar or some nasty gap down, that is the focus. What is over there to the left, that was the reference point, is less important than what happens in the moment. Qs, again, strong. They're holding up here pre-market, going sideways. They're right at the 50. That unfilled gap's a bit higher. And we'll see what happens when it gets there. Transports are weaker, right? They closed red yesterday. And they kind of little bit weaker here. Not a big deal. And looking at the futures, well, let's look at this Russell chart that I have here. Well, there you go. I mean, the diamonds, it's the same thing. Kind of the same thing in most, little differences here and there. But so far, everything is acting like it wants to go higher. Here's the S&Ps. So they've entered into this little void area, but the 50 is right there. So here was the resistance. It tried to roll. It couldn't. Probably some shorts began to cover. And so far, everything points that it's going to work higher. To the next reference point, whether it's the 50 or just above that, we wait to see if it's going to, sellers are going to step up here in a big way and push it down. NASDAQ futures had a bigger day yesterday. See the big wide range bar. And I mentioned this yesterday pre-market, that this could potentially set up a breakout bar failure. Since it's cleared these highs, I'm not saying it will, but if we go through today and nothing much happens, meaning a relatively inside day or narrow range day, and tomorrow it trades underneath that, start to put on some shorts. That's tomorrow. We'll see where today ends. And Dow pushing up toward that 50. Bonds are down a little bit. They tried to hold this area, rolling over. Oil still holding up there pretty well. So far, acting bullishly at resistance, absorbing supply, even after the wide range bar. So looking good. Gold and a flat, I guess waiting for something to happen here. And, British pound. Yes, this was the whipsaw yesterday. And another vote for the bull side here, when that whipped to the downside and came ripping right back again, all the way up here. And so here we've got a tail, but all the candle bodies are still up here. Still says that buyers, I guess, like what's happening over there. And, the pound is going to be able to push higher. Yeah. Just looking at some of the other currencies. There's the pound, Canada. Looks good. Euro, not so bullish looking. Deep retracement back after a breakout. Maybe, I guess this is kind of not totally fixed yet, right there. Something else is happening today. There's something else happening today, or definitely this week, on this Brexit vote, and let's be interesting to see if this euro keeps dropping and the pound keeps going up. Right? Sentiment is dead neutral, Frank. It's unbelievable, maybe because of the churn in the markets, but these option traders, they don't know. They don't know. I mean, the markets are moving up, maybe because it's churning. If we see that the momentum to the upside starts to pick up, historically, they'll start to buy calls, and that's what we need. And that has been kind of the holdup in a sense of, we haven't gotten any signal from our internals, because while breadth has gotten to an extreme, sentiment's dead neutral. And the rule is sentiment and breadth have to agree. If not, it really doesn't mean a whole heck of a lot. So time will tell, right? We know we have, and the financials are doing well today. We'll see what's up. We'll go through and I'll look at what's down. Even Apple came back. It looked like it was rolling over. It came back. I don't think it's out of the woods yet, but it'll be one of the measures is to see if Apple can get above that high. It's got this next resistance point just above, so I don't think it's going too far. But so far, we have to accept the fact that buyers are in control. Look at Goldman Sachs, which has been getting destroyed. It's up here near 186, 188, so it's having a great day, and that's good for the markets. Okay. So there it is. Dan, all yours.
All right, thanks. Good morning, folks. Yeah, I was out yesterday afternoon, but I'm still checking, the quotes and charts and stuff. And I was just shaking my head saying, yeah, it's just another day. They don't want to give them up. Open positions were very tight. We have this inverse IWM. We're long this Tango Whiskey Mike stop under, and we just put this trade in the green trading room. Greg did. We didn't do it officially for our newsletters. We got this tandem still 25% lot, and the IWM. I adjusted the entry under today's Wednesday, under Monday's low. Still looks great. And that's it. We just don't have much, and that's for all the reasons we're talking about. So, Groundhog Day again. You hear me saying that over and over again. But we don't even have the start of weakness today. We had the start of weakness a number of prior times, which had no follow through, but we're still strong right now on opening high. So I have a bullish day trade bias. Today's Wednesday, spider expiration. We could sell put spreads or naked puts on the spiders, 30-minute high. Let's look at some gappers here. This sure looks like a pharmaceutical disaster, gapping down to $6. I saw this little guy. Wow, I saw him this morning at around 250. I almost put him in the Facebook group. TBL, I looked them up. I think only 14 full-time employees. But even at 250, I was going to watch it. But now it's getting too extended because it has room. FISV, we'll take a look at anything you all want. FISV gapping down in a weak market. Wow, I saw it this morning around 72.50. It's gapping to support though, so it's not a tier one. We'll come back to it. This little Emma bot's been on a wild ride. We noticed that on Monday, the gap. This good setup for a day trade. We'll keep an eye on him. Goldman Sachs. Yeah, Goldman, I'd said the last few days it looked great. We had a 1, 2, 3 down here. And there just wasn't any premium for put spread, but even directional with banks acting well. The snap down, CEO leaving. Golf Whiskey. Somebody posted in the Facebook group. And I said, I like it. I like the pattern for put spread. It's lagging the market, but here's a W retest pattern. And look at the weekly. It's just spready. Slob, let it go sideways and break out. It still has a price void. You're buying Microsoft. Looks good. That's kind of an aggressive entry. Buying something 30 seconds into the day, but I like the 15 and daily. I don't like trading in the first 5 minutes unless it's a gap trade and I have a bullish pre-market to confirm it. That looks higher, 100% retracement, went sideways, breaking out again, JWN disaster on its gap, earnings release. That looks like a 30-minute low short. I'm going to put that in this little window. Let's keep an eye on it. This TWN, I'm sorry, that's not a TWM. It just hit the stop, but if you want to give it a 5-minute low, but broader markets are holding here. Yeah, give it a 5-minute low, but it's if the market, you know, and I made the comment that if the other broader markets hold, meaning tide is rising, then you know, it's probably not going to work. FTC, big old gap, but too big for me. USB breaking out of the sideways consolidation. I said I liked XLF, you know, going sideways like this and the bullish engulfing on Monday. You're kind of chasing now, though. PNC had earnings and it's still going sideways, but if it can negate this red bar and trade over yesterday's high, it looks better. There's Goldman Sachs. I mean, there's just no entry for me. CME, it's